Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Monday. I hope you had a great weekend out there. Man, it was hot Friday and Saturday, but Sunday was just beautiful yesterday. Overcast, so it didn't get too hot. It was a great day to be out on the golf course. Rory McIlroy won the Masters. I don't like Rory, so I wasn't thrilled about it, but it was in a playoff, so at least it was exciting. And the Diamondbacks took 2 out of 3 from the Brewers. I only bring that up because, well, half of Wisconsin lives in Arizona, and they're all cheeseheads and Brewer fans. They're so annoying. So great job by the Diamondbacks taking 2 out of 3. And, well, to be perfectly clear, about half of my friends apparently are from Wisconsin. I always tell them the same thing. If Wisconsin's so great, why don't you still live there? That's all I say. Right? You should be Arizona fans now, but you know how it goes. 800-951-0592. That's our toll-free number. What do we do? The physical delivery of wealth insurance. Boy, probably want a lot of that right now. Of course, what am I talking about? Gold and silver. And, you know, we're coming up. We're 29 years in the business. This is my 22nd year doing this. And everything that we've been telling you is true. At the end of the day, gold, right, it's the winner, right? When everything else fails, it's gold. And how much truth is that now? We're seeing it. Right, we've got all kinds of market chaos, right? Tariff this, don't tariff that. You know, raise the tariff, lower the tariff. This is the tariff here, tariff there. All that's taking all the headlines. We've got a funding problem. See, and this is what happens to fiat money. Because what? They print and print and print and print and print and print and print. And then they give it different names. Like somehow we can baffle you with bull crap. I wanted to say something else, but it's a family show. They want to baffle you with stuff, right? We've got quantitative easing. We've got quantitative tightening. We can lower or raise interest rates, right? Think about for decades, they try to convince us that they could control the entire economy by lowering or raising the interest rates. And everybody on the stock channel be, oh, look at the Fed. Oh, they're so good. Booyahs. Listen, I'll tell it to you straight. Get your ass into gold and do it in a hurry. Because I'm going to tell you right now, this isn't a tariff problem. This is a liquidity problem in the U.S. debt market. By the way, the debt market, the Treasury market, makes Wall Street look like a pimple. That's how big it is. See, and this is the problem with the boom and bust cycles that they've given us. I didn't give it to you. I say this, Donald Trump didn't give it to you. It's not going to be his fault. They're going to blame him. It's not going to be his fault. Our central banks gave us this. People will never have a clue. They'll never wake up to it, Jason, because they want to believe, the tariffs, that did it. No, wait, I got it. It was those evil Chinese for building all the cheap stuff. It was their fault. Yes, darn them. How dare they? Are you kidding me? Do you really think Apple and Amazon and Tesla and every other major company, Microsoft and everybody else, you think they really hate the Chinese?
No, they love them.
They love them. Guess what? Their money's just as safe there as it is. You know what? It may be safer over there than it is here. Why do you think all the crap is built there?
Yeah, they've bought the financial system. They've bought the politicians. They've bought government. They've bought the media. They've bought the education. They own all of it. So how is the average guy supposed to walk around and know what's going on when
I'm just so tired of Americans being dumb. I'm just tired of it.
You know, if you don't know any better, right, Joe? You grow up in a society that's this controlled. It only takes, there's only like a small percentage of people that ask the right questions. In other, at least in this country, Joe and I can talk about it without going to the gulag, right? At least we can talk about it. But who knows for how long?
For a little while longer.
Right. So yeah, I don't think people are dumb so much as they've been propagandized.
No, they're dumb.
You think they're
dumb? They sit there and listen to Jim Cramer and right? I mean, they're so dumb.
Well, does Jim Cramer even know? Does he even get it? Does he?
No, listen. He's just the debt money system is the greatest system right now. Oh, well, there's problems with the gold standard. You know what the problem was? You know what their big problem was? Well, guys, we just can't go into debt anytime we feel like it. That's our problem. Well, guess what? We go into debt all the time now, and it's great, isn't it? $40 trillion and still counting. Well, remember that idiotic call from Goldman Sachs about $4,500 gold? Everybody's jumping on the bandwagon. 800-951-0592. A quick look in at the markets as over the weekend, the Trump administration saves Apple and says that, hey, we're going to temporarily anyway suspend the tariff on iPhones, which, by the way, you know what? That's like 25% of everything China ships us. Tell you how big iPhones are, and this notion that somehow our companies hate China. They don't hate China. They love China. Believe me. By the way, really quickly, Apple says it's scrambling to figure out how to get more production in India and Vietnam. Yeah. Notice how they didn't say America. Yeah, that's never going to happen. But neither here nor there. The Dow's up 350. The S&P's up 60. The NASDAQ's up 190. The 10-year note, again, got right up to 4.5. Friday again, as fears continue to circulate about the health of the U.S. Treasury markets. There was more rumors. First, it was that Japan had been dumping over the weekend. It kind of emerged that kind of like everybody. The entire EU is dumping. So how are they going to pay for all the defense spending they're claiming they're going to do? The fact that they're in recession, right? They're going to sell debt, right? That's what they're going to do. Well, what debt do they have? Well, we got Treasury. We'll sell those. Big problems. Just telling you. But Joe, the Dow's up 350 points today. It's not that big, right? It's okay. No. Smoke screen. Oil is flat. Gold right now, it's down 26, 32.10 right now on gold. And again, we've seen this pattern over and over and over. Let's hit new highs. Let's consolidate. And then let's hit new highs and consolidate and hit new highs and consolidate. Every time we break that every $100, this is what we do. The only question is, how long does it stay? Right? How long does it stay? Well, let's look. It's April 14th. We started at $2,700. Okay, now we're over $3,200. Right? You can do that. It doesn't stay very long. we could have $3,300 tomorrow. We don't know. I have no idea what the next announcement is going to be. By the way, silver, 32.10 right now. So silver, again, being dragged along by gold. As we said, silver, the industrial metal, gold, the monetary metal. So it kind of makes sense, right? Because what are we worried about? Well, we're worried about the industrial side of things right now. So silver lagging a bit right here. But let's talk facts here. So over the weekend, see, this is when the problem, because they don't want to do it during the week, because then they have to have their guys go out on TV and tell the truth, right? They don't want that. But what I want to say, I don't know, it was probably 6 weeks ago, something like that, where Goldman Sachs, seemingly out of nowhere, got to remember now, I think gold at the time was just over 3,000. So we had made already $300, right? And they said, hey, by the way, their gold forecast to start the year is 2,800, just to give you some thought about it. When they re-updated, right, and they said, okay, $3,300 gold. That's our new target. And I think it was actually $3,250. But then they said, oh, by the way, don't be shocked to see like $4,500. Right? But that was their way out of the money call. Well, over the weekend, Goldman's got a new price target. It's not $3,250. They're now saying that they're upgrading their year-end gold forecast to $3,700, while reiterating what they call the upside tail risk scenario of $4,500. Now, here's what's funny. UBS, JP Morgan, some other major banks out there, of course, they've all done the same thing, right? They all got to raise their price of where they think gold is going to be, but they referenced Goldman's research and saying, the way out of the money ridiculous call is now maybe the right call. So, what did they talk about? Central bank gold demand, yes. But the increase in ETFs, China continuing to be the largest buyer. You notice how when the World Bank Council, they released their central bank holdings, right? China's always, we added 3 tons, 5 tons, 10 tons. But then when you talk to the actual guys that do, they're like, oh, no, China added 50 tons. They don't, because why? They don't have to tell you, right? They can tell you whatever they want. But over at UBS, what did they say? Well, first, sentiment, right? What does that mean? Well, everyone likes gold. There is no alternative. Think about this. This is a new word, UBS. TINA. They're calling gold TINA. There is no alternative, right? That stands for TINA. To gold holding strong within the investor community. And again, talking about the lack of confidence in the United States, and particularly in the U.S. dollar and U.S. Treasuries, the flight away. They call that de-dollarization. They're saying that de-dollarization is only growing. Well, that kind of makes sense. You know what the one thing, Jason, they said was weak? Jewelry demand. That's the one thing that's a little weak. But then they talked about insurance companies. Remember, China now saying they're insurance companies. What we're being told is that they want their insurance companies to accumulate 400 tons of gold. So, Jason, they're not playing around here. This is a major change. And JP Morgan, UBS, by the way, UBS just hiked its forecast, 3,500, right? But every one of these guys, well, we're going to say 3,500, 3,700. But then they all write, oh, chances are it's going to be higher than that. We just don't want to say it, right? We don't want to say it. But what they're not saying is, let me tell you the reasons why we think it'll be lower than that. They're all swinging to, okay, listen, we're going to raise it as we go. So essentially what all of these guys are saying, hey, at $3,400, we're going to raise our gold forecast again. But, Jason, it looks like $4,000 gold now looks, I don't want to say likely, but it looks likely. And the chance that, listen, and seeing what these guys are saying, I'm starting to wonder, is 4,500 the light side of the tail risk?
Well, I will continue to say this. Gold is a leading indicator. It is not a lagging indicator. I think people really do believe, okay, the inflation hits, the markets go crazy, and gold reacts. The reason the gold's a leading indicator is because Joe and I get lagging information. But there are those out there that do not get lagging information. They know what's going to happen next week, next month, and a year from now. Gold from the end of 2023, when you could have bought an ounce of gold maybe for $1,900, right, Joe? You know, the end of 2023, so just all of last year and the beginning of this year. I don't even know what our prices are. $3,300, $3,400 for a $20 Liberty. Joe, I don't know if the destruction of the economy is it's just barely being scratched right now. So if Joe and these other prognosticators are saying $4,500 gold, which is another $1,200, $1,500 more, the destruction of the economy is going to be severe, and it's going to be inflative. If we went into a depression and the money printing didn't happen, we could see the price of gold go down, and your gold wouldn't go down in value. The price of other things would go down if they just allow the market to be the market. But, Joe, we know that they want to inflate their way out of this. And gold is showing you, yeah, they're getting ready to inflate their way out of this. Gold is screaming at everybody that's listening. Gold is showing you the plan is to inflate their way out of this thing, to get sort of a World War II economic reset. It took World War II to reset the worldwide economy. What's it going to take this at? What are they going to point? You might be right. You said earlier, just have a martyr. Call him Trump. Everybody can just point the finger at that guy, right? Maybe that's it. Maybe it's a war in Iran, right, Joe? We have to go occupy Iran, spend a bunch of money. Hey, how much money does it cost to occupy Iran for 5 years or 10 years? But print, right, Joe? Print like crazy, and gold is telling you ahead. Get ready, here it comes.
Yeah, and why so fast? Right? Why so much? And again, remember, the bubble's bigger. It is so much bigger than 07. It's scary. 07, 08, that wasn't even $10 trillion. It wasn't. The size of the Treasury market has exploded. And there are so many things we still don't know. But here's the big problem now. Everybody from the people in the know, Apollo, JP Morgan, Goldman, UBS, Morgan Stanley, Bank of America, blah, 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 you name them all. They're literally saying foreigners are selling treasuries, period. That's not supposed to be what happens. Pull your head out. What happened during the financial crisis? The dollar skyrocketed, right? and everybody bought treasuries. The flight to safety. How many times have you heard this? Guess what? The flight to safety isn't in debt-laden paper. It's to gold. They're saying that with $1 trillion in base trade, it could be the unwinding of the base trade among levered hedge funds, which we talked about them as well. How did they keep rates in check? How did rates only get to 4.5%? They let all these hedge funds become over-leveraged. That's their favorite thing to do. And now they're saying, holy smokes, they've got to unleverage. At the same time, it seems like the whole world, Canada, China, Japan, the Eurozone. Listen, this is right in these articles. They're just flat out saying these countries are dumping treasuries. JP Morgan has a message for Jay Powell. I'm going to share it with you right now. 800-951-0592, Patriot Radio News Hour, Joe and Jason on this Monday. And I'll just spell out what's happening. So while all of this is going on, and either Trump's the greatest, Trump's the worst, tariff this, tariff that, there's a big problem. What happened in the Treasury markets last week was horrifying, but covered up. Why? Well, because it had to be. I mean, really, could you imagine if the Trump administration just said, the heck with it, their tariffs are what they are, right? Today, I don't know, that would probably be, 30,000. Maybe. It's at 40. Gold would probably already be 4,000, maybe more, right? But I want to tell you, here's the thing. The Federal Reserve continues to say, oh, no, we don't see anything. Everything's fine, right? We're prepared. We're worried about the tariffs and inflation, and we're not going to do anything. Now, remember, I shared with you, go back again, a month to 6 weeks ago, Mark Cabana from Bank of America, the guy's brilliant, writing a letter again to the Fed to say, hey, dummies, don't you see this? Right? And this is before these tariffs came into effect, right? There was just threats at the time. We got a problem. JP Morgan over the weekend. Only if you just ignore the blow up of the base trade. So what is JP Morgan talking about? The blow up in the Treasury markets last week. Which, as we explained previously, see, they've told this story. Bank of America's told it. JP Morgan's told it. Goldman Sachs has told it. UBS has told it. All of the major stakeholders have told this story. All of the liquidity that is available in the market has been soaked up. There is a liquidity crisis right now. So what is JP Morgan saying? They're telling the Fed, hey guys, all that excess liquidity we had, it's gone. There is none left. There's nothing to stop it this time. At least, Jason, last week, thankfully, there was still some liquidity left to kind of keep it in place.
Yeah, the liquidity, I think that's when we saw a couple Fridays ago. We started to see that liquidity freezing up, didn't we? Japan decided they needed to dump some treasuries quick, and there was nobody to mop it up. You know, when someone's getting rid of it, somebody has to purchase it, right, Joe? And I think the Fed's plan is to load up again, but they can't load up on all of it. You know, if China and Japan are both selling and some other nations decide they want to start removing it, I don't think Great Britain's going to be able to keep up with that demand, right, Joe? They're just not. You know, Germany's not going to buy up U.S. treasuries to keep up with the selling that Japan and maybe China will be doing.
Listen,
that's liquidity problem. That's what Joe's talking about.
Yeah, listen, everybody's selling. Why? Well, number one, they're all broke, right? They're all trying to do what we're trying, right? Everyone's trying to avoid what? We're trying to avoid a recession or, heaven forbid, something worse. Did you see Ray Dalio this weekend? I keep telling you, you better pay attention to these guys. He's not worried about a recession. He ain't worried about that. He's like, that's coming no matter what. What I'm worried about is something far greater. This is far, far greater. Do you remember the day the Dow was down 2,200 points? And it was down 1,800 points the day before. Oh, it's tariffs and tariff this and tariff that. Well, that was the headline. But you know what we didn't see under the cover? We didn't see the liquidity crisis. I mean, I remember talking about, oh my God, the 10-year note, look at what it's doing. But not fully understanding they're out of ammo. Because think about this, when there was enough liquidity, when there wasn't enough buyers, they bought it all. And kept the tail small, right? It kept it, we didn't see a 10-year note go from 4% to 4.3% to 4.5% in 48 hours. And now J.P. Morgan telling the Fed, I don't know what you're doing, but there is no more liquidity left, which tells me, as usual, the Fed is going to be late. I don't know. Could it be tomorrow? It could be. Could it be before today's out? Could be. Before the end of the week? I'll just say this. I don't know that we're going to be able to get out of April with the situation that we're in right now. I think that's how quickly we're probably going to be faced with some sort of emergency action similar to what we saw in 2019 before COVID came around. But the big difference, the part that worries me the most, is it seems like everybody sees it coming. Everybody's getting ready. Except for what? Well, the stock market, well, at least it's still 49. Well, look at the Dow's only up 150 points now. So I don't know. Jason, it changes this quickly. All I'm telling you is gold is so cheap right now. And when we look at what is happening, here's the choice. Do you want to buy more treasuries or do you want to buy gold? That is the only choice that any of these countries are talking about. And here's the reality. Most of them are just selling treasuries because, well, we're broke. We can't even buy more gold. The ones that can, yeah, we sell treasuries and buy gold. Patriot Radio News Hour. We'll be back. The dollar continuing to tank here. Patriot Radio News Hour, Joe and Jason on this Monday. Really quickly, $20 gold. I'm going to give you a deal here. I know I know you guys aren't dumb. Most people are, because number one, they don't listen. Oh, I don't want to hear this. I want to feel good. No. Buy gold, you're going to feel good. Believe me on that. I've been telling you, pleading with you, reasoning with you, yelling at you, encouraging you to get more diversified than you ever thought you needed to possibly be. $20 gold pieces today, 1 through 9, 34 and a quarter. 10 or more, $3,400. You know, the sad part is, I mean, it could be $3,400 tomorrow if the bond market breaks. So what's happening? They're saying that we are now going in 24-hour intervals, that the dollar has completely decoupled from the Treasury market, right? Because remember, as Treasury yields go up, the dollar's supposed to get stronger. It's not. See, this is the sign of weakness. What does this tell you? This means they're running out of the Treasury markets and they're running out of the dollar. And now yields are going up because of how weak it is. The dollar's down again today. Policy making so chaotic. No one can think about beyond the next 24 hours. The uncertainty now is at intolerable levels for most businesses involved in any international trades. The question is, how quickly does it hit the real economy? The dollar has gone under 4 standard deviation decline in just the past week alone. Just let me say this. That's a lot. That's a huge decline. Normally, this would point to a likely rebound. But if we are witnessing a structural regime change similar to the early 1970s with the breakdown of Bretton Woods, then all bets are off. This is coming out of FX traders. This is what they're talking about. Now, I don't need to tell you what happened in the 70s, do I? Do I need to tell you? Do I need to remind you? By the way, this weaker dollar, it adds to the cost of everything. Right? The tariff is going to be bad enough, but now that the dollar's weaker, right, it costs more dollars to buy this stuff. It's almost like it's we say perfect storm and all this stuff. Jason, this was the likely outcome. This was the likely outcome of a fiat money system, and here it is. Here it is. It is very simple to understand. Remember how I told you Wall Street was priced to perfection? And we don't get perfection, and obviously now, you guys know we don't have it now. And we're going to start seeing, and again, why do I keep telling you Wall Street's not cheap right now? Wall Street's not on sale right now. Wait till all these earnings get revised down. Wait till it happens. I mean, we had somewhat, again, Goldman Sachs today had their earnings out because, we had some of the banks, and they're all the same. They were okay. And they tried to cheerlead. Oh, no, they were great. No, they weren't. They were okay. But that's it. Is that perfect? Not close. Wait till we get the bad ones, Jason. I mean, that's the part when this decline's going to get really scary.
Yeah, you said it a minute ago. When you buy gold, you buy our special today, you're going to feel real good about it. Since I've been part of Patriot, which is over 7 years now, when the customers come in, these are the most relaxed, calm people I've ever dealt with. They want to slow things down. They're not in a hurry. They're comfortable whether they're buying or selling. and they're very happy. It's when you have enough in savings, and you know that your savings can't be pilfered like your bank account did after COVID. Whereas if you had $100,000 in the bank before COVID, here you are 5 days later or 5 years later, the $100,000 digits are still in your account line, but you can only buy $60,000 worth of stuff, Joe, or maybe less. You're being, the theft of your accounts is happening wholesale. Then when the markets are weak, you can't hold it in the markets for too long, right, Joe? Or else that might go away. And gold and silver is just saying, print it up if you want. Gold's not going to get any more valuable or any less valuable. It's always going to be an ounce of gold and one whole live cow, right, Joe? A fine tailored men's suit. Gold doesn't do anything. It doesn't make men wealthy and rich. You're not going to buy 20 ounces of gold today and be rich. You may be rich and then buy the gold. You may be working class and buy some gold, but it's going to protect your savings. So rich and poor alike put their money into this to protect their savings, Joe.
Yeah. 800-951-0592. And I'll just give you, some of the ridiculousness that you hear out there. So our he's not alleged. Our National Economic Director, Kevin Hassett, was out this morning. I'll tell you what he said, which should make you run to the phone, I'll be honest with you. 800-951-0592, $20 gold, 1 through 9, 34 and a quarter, 10 or more, 3,400. Final segment. 800-951-0592. Joe and Jason wrapping up this Monday. National Economic Director Kevin Hassett, here's what he's saying. Ready? Jason, more than 10 countries have made very good, amazing trade offers to the United States. And he said there's a 100% that the United States will not be in a recession. It's 100%. Wow. That's great stuff. What? They're amazing? I haven't heard any trade deal offers. Here's what he said then. This is what makes it funny. That U.S. trade representatives are mulling whether these offers from these other countries are good enough. Well, wait a minute. You just said they were amazing. Right? So, I don't know. I'm not sure. You tell me what's going on. And not to me, I told you that Howard Lutnick, this guy's a clown. He's the Commerce Secretary. Over the weekend, he's sitting there saying, hey, by the way, these tariffs that they took down today to save Apple, they're only temporary. They're going to come off in a month or two. And we need, this is what he said, we need our medicines, semiconductors, and electronics to all be built here in America. And again, ready for the stupid people? I'm going to do the stupid people. Oh, yeah, that's a great idea. That's the dumbest thing I've ever heard. I know it sounds great. Do you know what an iPhone would cost made in America? I don't know, $3,000. I don't even want to think about how much medicine's going to cost if you build it here. I'm sorry, guys. That's just the reality. Can we pull our head out of our backside for just 1 minute? This makes absolutely no sense. Well, again, unless you want to crash the economy and have sky-high inflation. I mean, you talk about stagflation. This would make the 70s look like child's play. Seriously. That is a terrible idea. Terrible. Now, would it be great if we could figure out a way, because there's certain stuff we can do, energy, right? Farming, right? There are things that we could sell. Figure out how to sell more of those. But sitting there and talking about, listen, we got it here. We got this mega chip plant. Everyone's seen it. You know what I'm talking about here in Arizona. It's tied to NVIDIA. It's tied to Apple, Taiwan, Semi. it took I don't even know, 4 or 5 years to build. And they've only built one piece of it. They've got 2 other pieces that need to be built. You know, they said that the next one's going to be done 2030. Who knows when the third one's going to be done? So that we can have some of the high-end chips being made here. I think that's a great idea. But it's not an overwhelming amount. But at least there'll be some here. But, Jason, that's all we can afford to do. Imagine if we had, everyone's got to buy the chips made here in America. You know, you can buy these computers now, couple $100, $300, $400? They'd probably be like $4,000. I mean, seriously.
Life's going to get...
But all you dummies, keep clapping, dummies. Keep clapping, dummies. 800-951-0592. Jason and I are coming right back with the Half Empty Cup.